Good morning and welcome, everyone. I'm David Dodd. I'm in New Orleans, the ancestral home of the Catawba, and I am delighted to be facilitating this meeting. I'm a member of the Funiding and Finance Leadership Group, and we had discussed having this year really focusing on environmental justice and on how financing can play into that. And our guest speaker is a pioneer. I mean, he's done some amazing things. His name is Damon Burns. Damon's a New Orleans native and public finance professional with more than 10 years of experience in entrepreneurship, investment banking, corporate banking, and economic development. He's currently the president and CEO of Finance New Orleans, a housing and economic development finance agency that has financed over 600 million of affordable housing and economic development projects in New Orleans. Prior to joining Finance New Orleans, he founded Multivestor, a financial data and technology company focused on the municipal bond industry, using 200,000 in private investor capital. Multivestor was selected to participate in some of the nation's premier startup programs, including Teachers Rising Stars Boot Camp, Morgan Stanley's FinTech Investor Showcase, and Power Moves NOLA. Other technology experience includes being an investment committee member of the New Orleans Startup Fund, which provides early stage capital to New Orleans-based companies and high growth potential. Damon earned a marketing degree from Texas Southern University and an MBA with a finance concentration from the University of New Orleans. He also earned a professional certificate in urban redevelopment from the University of Pennsylvania. Damon and I met a few years back, and when Joyce Coffey, our fellow leadership team member, mentioned his name, I said, I'll reach out to Damon right now. I think you're going to really enjoy his presentation. So with that, Damon, I'll turn it over to you.
Thank you, David, for the kind words and the intro, and it's nice to meet everyone. Happy to be here to present and represent Finance New Orleans. Again, my name is Damon Burns, and I'm the CEO of Finance New Orleans. We are the city's green bank. Historically, we've been its housing finance agency as well. But as the world has changed and emerged into what we see before us today, we've had to change with it. And we've been through some ups and downs over the last few years. But I'm going to talk to you today about some of the adjustments that we've made and how we've reshifted our focus to hone in on the resiliency and sustainability needs of New Orleans, because without us addressing those needs, we won't get very far with any other plan. So that's what we've been doing at Finance New Orleans, and I'm happy to share with you today. So a little background on us. We are a quasi-governmental green financial institution. We were created by the city of New Orleans in 1978, originally to increase the affordable housing stock in the city, and gradually we added economic development to our responsibilities. So over time, you heard David mention, we financed a substantial amount of affordable housing investment in New Orleans, and we were pretty successful at it, mainly on a single family side. We did a little bit of multifamily, but Katrina happened and a Great Recession happened. A number of other events happened along the way that just really disrupted our financial condition as well as our production for the community. So in short, we just weren't providing the same community impact that we had been through the 80s and the 90s. And we provided some stability to the community because the community saw Finance New Orleans, or the Finance Authority at that time, they saw it as a bedrock for the community that couldn't get the capital from the bank, or that struggled to get capitals directly from the banks. These programs put on by Finance Authority help create home ownership opportunities for many types of New Orleanians and help create different situations where people were able to send a child to college or buy an investor property or just buy another home. We hear about these scenarios all the time, even to this day. So there's been a lot of positive impact provided by Finance New Orleans, and we wanted to continue that tradition. So I started with the agency 7 years ago, and when I started, this disruption had already taken place from Katrina and the recession. So we were trying to figure a way out. The board was trying to figure a way out, and the previous administration was too. So one of the first things I did when I got into office was we looked at some of the most pressing problems that the city is facing at the moment. And just a snapshot of a few: the projected sea level rise, the lack of affordable housing for renters, the destruction of our financial condition, not just ours, but across the economy. All of the public agencies were affected in one way or another. Small businesses were affected. The larger corporations were affected. The nonprofit institutions, the university, the whole ecosystem of actors in New Orleans was affected. And we had to deal with the not just the rebuilding of ourselves, but the rebuilding of the community. And then, of course, the energy burden that's bared by the affordable renters and just households in general in New Orleans. We have a much older housing stock. So energy efficiency, clean energy is really important to our future. And one of the other things we did in order to really give a foundation to the new work that we wanted to do at Finance New Orleans, we had to develop what we call the Resilient New Orleans Finance Plan. And the Resilient New Orleans Finance Plan is a spinoff of the city's climate plan. And the reason we did a spinoff of the city's climate plan is because when we went out to the city of New Orleans and started telling them about our projected direction, which way we wanted to go, the city at the same time was considering starting a brand new green bank from scratch. So it was going to go through the process of creating a new governmental entity that essentially had the same powers as Finance New Orleans, but just a different focus, a different business model. So in that process, we raised our hands as an organization and said, hey, we can play that role in New Orleans. No need to create a new agency that's going to take a few years to get off the ground. You already have one right here. Let us play that role. So the city agreed. And one of the first things we did was put together this Resilient New Orleans Finance Plan, which is a government framework for mobilizing public and private sector capital projects that are physically transformative, climate resilient, and socially impactful. So those goals are directly connected to the city's climate plan, and we wanted to take it a step further by putting a green finance framework around it, because that climate plan lacked detail or strategy as to how do you finance clean energy, how do you finance clean transportation, how do you finance water management in the community. We need to have a public sector framework to give each agency, including the city of New Orleans and all of the sub-agencies, to give us all a framework for reinvesting in our communities. And we believe this is something that every community is going to need, every city. You're going to need some kind of collective plan that goes beyond the climate strategy, that talks about how do you put this to work? What are the financial targets? What are the financial strategies? What are the mechanisms in place that will allow us to bring these things to life? So our framework is built around 4 principles: climate action, sustainability, green economic development, and social equity. The types of projects that we're targeting include renewable energy, green buildings, which includes housing, clean transportation, water management, as well as nature-based solutions. And there are many other categories that just don't show up on this chart, which we're very interested in. And we think there's a lot of evolution and innovation to come over the next 15 to 20 years that will shift this chart around a little bit. So now that we have a foundation with the city of New Orleans and the other public sector agencies around the city, we decided we had to create our own strategic vision. So in 2020, we announced our new strategic vision to the community, which is built around making New Orleans more resilient. So our strategic vision is to have a resilient New Orleans with opportunity for all. And then we also created new strategic vision goals, which include using climate resilience to physically transform New Orleans, create economic and education opportunities. We'd also like to build wealth for community reinvestment. And we want to grow as an agile and innovative organization. So all 4 of these goals, maybe not verbatim, but they were inspired by the city's climate plan. So for example, using climate resilience to physically transform New Orleans, that's taken directly out of the city's climate strategy. So we wanted to make sure we were directly connected to what the city is doing. We didn't want to be off on our own game plan. We want to be as value added as possible. And that's how we've connected ourselves to the city's overall strategy. And of course, economic and education opportunities are embedded there. So making sure that we're providing DBE companies an opportunity to not only participate in projects, but lead projects, to make sure that we have education opportunities for people that want to buy homes, but people that want to become landlords too. Being a landlord is a big deal in New Orleans. So owning a multi-unit property is cultural here. So we provide education opportunities for that. And then we can't do any of this without having public wealth. A lot of times it's expected that government just breaks even or takes no money when it invests in programs or projects. But we're a quasi-governmental agency, and we're built to participate in private markets. So we need to have wealth, public wealth, in order to make our programs work and for them to be meaningful and sustainable. So we go out and we talk to banks and foundations and impact investors and community banks, investment banks, all different types of organizations in the financial ecosystem that can help us create more of our own public wealth so that our programs can become self-sustaining. And then as it relates to being innovative, we also believe that governmental agencies should not be laggards in innovation. They should be leaders in innovation. So we are trying to position ourselves as a thought-provoking and innovative organization that responds quickly to changing market conditions, that responds quickly to community needs and demands. And the way that we have to do that is by having not just technology, but good processes in place and just funding the concept of innovation itself. So we've dedicated capital in our budget. We've dedicated capital to make sure that we're developing business opportunities that line up with what innovation means. So that could mean adopting new technology for backhouse operations, but that also could mean adopting a new technology for the community. And how do we integrate that? So as a governmental agency that looks a little bit different than a private organization, so we take pride in that part, and we think that is what is going to be the bedrock for these first three vision goals to come to life. We also created new core service areas. I mentioned before that single family was our primary program in the 80s and the 90s. So we didn't get rid of it, even though that market has changed substantially, the market for HFA bonds and mortgages from the community. But we still think it's the bedrock of our offering to the city of New Orleans. So sustainable home ownership is still our bedrock program. We've also created a new multifamily program, which is our most active program at the moment. There's just a lot more capital in place for affordable rental development. So we've participated in 6 rental projects since 2020, and we're expected to close anywhere from 5 to 10 this year. So the momentum is picking up. There's been a lot of pent up demand for green affordable housing, and all of these projects that I'm talking about have a minimum green standard to them. Either we're enterprise green communities, fortified, or LEED, and then there are other technologies that we're encouraging developers to include in their projects. So although, when people talk about the green revolution, a lot of times it's on the infrastructure side. We've started with housing because housing is a big part of that equation and needs to be factored in. As a matter of fact, we think it's the core because that's what the community is about. It's about housing, and you need to build the right infrastructure around that housing. Thirdly, we've created an infrastructure fund. We call it the Resilient New Orleans Fund, and it's directly based on that Resilient New Orleans plan that I told you about a few moments ago. So in that fund, it's going to be a little different than our traditional HFA housing programs with single family and multifamily. This is the green banking arm of Finance New Orleans. And in that process, we are looking to finance solar projects, solar and battery storage, microgrids / resilience hubs. There's a number of water projects that we've looked at, some clean transportation opportunities, and just working with other governmental agencies on bringing their projects to life that may not necessarily fit into their capital budget, but they're critical for the community. And there's special projects that need to be tried and experimented on while we're the platform to make those things happen. So we're working not only with the city, but again, with other public sector agencies on building a pipeline of infrastructure projects. And we've also been approached by some private sector solar developers who are looking to bring solar projects to life in New Orleans. So we haven't completed our first project on infrastructure just yet, but we're moving in that direction. And one thing I failed to mention about our single family program, we recreated the traditional HFA mortgage program, if you're familiar with it. It provides a first mortgage and a second mortgage, which is usually down payment assistance, so that a homeowner can afford, usually a homeowner making anywhere below 140% AMI, they can use this product to allow them to afford the home. Because not only do you need the cash flow to afford a mortgage, but you also need the upfront capital saved in order to get into the home. And that tends to be very problematic, particularly in this economy that we're facing today. So everybody's being squeezed, and that's where our program comes into play, where we provide a first mortgage and a second mortgage to help alleviate some of that stress. In addition to this first and second mortgage, in our new green mortgage program, it also provides a budget to make the home more sustainable. So we learned a really tough lesson after Katrina, is that we can invest in a lot of housing and help create opportunity. But when disaster strikes, if those homes aren't prepared for those disasters, and if they aren't resilient, then it's going to be a lost investment, and people are going to end up in a worse position than when they started. So that's why it's so critical that not only do we keep investing in housing, but we have to invest in green housing. So we found ways to do that on the single family and multifamily side, and complemented by our infrastructure program. And our business model is still a lot the same as it is around the country for HFAs and green banks. We provide green mortgages, bonds, tax exemptions, other types of public benefits, green infrastructure bonds, and credit enhancements. And we work with a series of capital providers, including commercial banks, credit unions, investment banks, impact investors. We've even started developing relationships with venture capital companies, because somebody has to invest in these new technologies that are going to be embedded into these public sector projects. And of course, there's a series of investors out there that buy the tax credits and bonds that come out of these programs. The impact we're looking for from all of this work: affordable and sustainable housing production, green job creation, stormwater mitigation, more community awareness and action, green tech deployment, and a reduction in our CO2 emissions. In order to make this work, we've had to create a roadmap. There's a lot. This is very ambitious. And especially for a public sector agency, we're always encouraged to take it slow on the public sector side, but we're trying to flip that on its head, because frankly, the people of New Orleans, they want it today. They need transformation right now. So we have to work double time and overtime in order to bring these concepts to life, because they can happen and they can provide a lot of benefit for our community. So as an organization, over the last few years, we've joined the American Green Bank Consortium. We've launched a new digital transformation plan where we want to give the community better access to our products and programs. We've closed 6 projects that I've mentioned to you before. They've had a total development cost of over $173 million. And as this program grows, we'll also offer bond issuance services to the developers alongside the property tax exemptions. And we've developed a pipeline of over $750 million worth of multifamily and green infrastructure projects over the next 5 years or so. And we're in a market right now for a $25 million community impact bond, which is meant to help fund the enterprise so that we can engage in more work and scale up our programs that I just explained. So moving forward for our home ownership program, we're looking to issue $15 million in single family or green mortgage bonds for single family first time home buyers. We're also looking to do at least $11 million worth of retrofits, existing homeowner retrofits for homeowners who already in their properties. They don't want to move. It's too costly to move. They want to stay in their neighborhoods, but they also need to make sure their properties are well maintained and they stay up with the prevailing investment that is happening in and around those different neighborhoods. So we're targeting single family first time home buyers as well as existing homeowners. On our sustainable development program, we're looking at upwards of $50 million worth of bond issues for large and DBE developers. We're working on our FHA risk share application so that we can provide the most credit-worthy rates to our community, small and large developers. And we want to expand our tax incentives this year. Primarily, we've been providing property tax exemptions in exchange for affordability. We're looking at adding a sales tax exemption in exchange for sustainability. So what that looks like is a developer, multifamilies, solar or private company otherwise, if they take advantage of a sales tax exemption, whatever funding is saved there needs to be spent back in the project on climate technology and services. So we're trying to figure out a way to not only enhance affordability, but make sure sustainability is always included alongside that affordability. And lastly, we're launching our Resilient New Orleans Fund. We're getting a seed investment from the city of New Orleans to help set up this new green banking arm. And we have a series of projects that we're looking to demo this year. And we're working on getting an allocation of the Inflation Reduction Act funding that's going toward the Greenhouse Gas Reduction Fund. And in those demo projects, there are new provisions in the IRA for direct pay tax credits and other incentives that allows an agency like ours to build a consistent program around financing solar and other types of resilience projects. Over the next 10 years, we have a community impact goal of at least $1 billion. And we think that can happen based on that pipeline that I just talked about. And multifamily has been in heavy demand for the last few years. So there's more activity right now in multifamily than most other areas, but we think it's going to pick up on the single family and infrastructure side, of course, which will allow us to create and facilitate a $1 billion impact for the city of New Orleans. And that's meaningful. That's not a lot of money in the grand scheme of the size of our overall economy, but it is a great spark for a new type of economy. And that is what we're endeavoring to do. So get $1 billion of new investment into New Orleans in the form of green housing, green infrastructure. And that completes my presentation. We have a lot of content on our website, www.financenola.org. And we also have an investor relations page, which is more geared toward our bond investors that you can find on our home website. But I encourage you to sign up for both because you can receive alerts about when we're going to market or just when we're releasing new programs. So I appreciate everyone's time and looking forward to taking any questions and just having a discussion with you today about what we're trying to do to create more resilience in New Orleans. I appreciate your interest.
Thank you so much, Damon. Now everyone in the leadership group and the rest of you can understand why we were so excited to get Damon today. I had asked everyone if they had a question to put it in the chat. I didn't see anything, but if you have questions, now's the time to ask questions or comments. Anyone?
Damon, this is Joyce Coffey. Thank you so much. Oh my gosh, it's just an amazing amount. Hi, so lovely to see you and really appreciate your generosity sharing this with the group. And I guess, therefore, my question goes even in the more generous mode. I wonder if you could tell us what personally has been the most challenging thing for you over and above Katrina, which obviously was an extraordinary tragedy. Can you just describe what is the most challenging part of being an innovative finance actor in, a city in the United States that all of us care deeply about, but also recognize is really on the front line of so many environmental injustices, climate injustices, and other real challenges. So what's the hardest thing for you?
Well, I'll start off by saying, Joyce, that I'll start with something easy, actually, because it'll feed into the hard. But the easy part is our community is craving innovation. So I don't have to really convince. We're at a time and place where I don't have to convince anybody or anybody else on our team has to convince someone that we need innovation. It's understood the community is coming to us with ideas. That being said, putting it to work is a different story because we have a lot of checks and balances. There are legacy investments that are in place, legacy processes that are in place. And when those get disrupted, people get upset for one reason or another. So along this journey, which, this journey of innovation for Finance New Orleans, it began before me. This agency has been trying to figure out something innovative for the last 15 years since Katrina happened. But in the same time, in my time in the agency, I've noticed gradual process or gradual progress. But every step of the way, somebody has to be convinced. Something has to be untangled. Sometimes the things that have to be untangled are large, sometimes they're small. But I think that's just a big part of this process, which is understanding where the community is today. What are the barriers to building the future, building what we want for the future of our cities, the future of our communities? What are the things that we need to do to get there? So I would say a lot of the struggle comes in, again, changing the process, getting people to consider a new type of investment or a new type of technology or a new way of doing things, even though the community may say they want it, you have gatekeepers in every organization whose job it is not to lose money and not to destroy the community along the way. So even in those cases where you have someone that's game for it, that wants to do it, they're going to be really careful. And that's why innovation moves slow on the government side sometimes, not because people don't want it. It's because nobody really wants to be the person to mess it up. So it takes a little bit of fearlessness and courage on the part of public sector actors to push innovation in a government setting, in a community setting.
I see a question pop up. How does climate change? Whoop, I just missed it. Sorry, guys. Hang tight. I'll get to it. How does climate change shift responsive investment models? Is there a new model for money following need versus leading need, Damon?
Great question. That's something we've been trying to figure out over the last few years. In 2019, we received a grant from the Mississippi River Cities and Towns Initiative. And that grant went to two cities along the Mississippi River, Memphis and New Orleans. We were the New Orleans representative. And the goal of that grant was to finance the research and development of an environmental impact bond for the city of New Orleans. So I'm laying that foundation to say that we've been studying this very intensively over the last few years. We've talked to a number of investors in the market, different investor types, large banks, small banks, regional, community, and we've tried to gather as much intel as possible about what that new investment model needs to be. So we've considered everything from a PRI, an EQ2, which is an equity equivalent investment from a commercial bank, and a PRI is from a foundation, of course. And then most of the time we spent on an impact bond model, which may have a success payment model built into it, meaning if the program or project is successful and it yields more economic benefit than we expected, then we would share that benefit with the investor. If it yielded less benefit than we expected, the investor would share in that less benefit too. So that's something that we've considered and talked to investors about. And I do think there is a future for that type of model. Right now, investors are just trying to figure out what green means. Mm-hmm. They're just trying to understand the basics of what a green bond or a green project really means. And I think that has captivated more of the attention of all of the investors in the market and the brokers that are out there, versus how do you structure the interest rate payments. I think the interest rate payments are now just being structured based on the credit worthiness of the underlying project itself or the issuer. And everybody's trying to keep that simple and get the mechanics of executing a green bond in order, because nobody wants to greenwash. So that's what we've been hearing in the marketplace. I do think there's a future for the success pay model. I think there's a future for digital solutions that we haven't quite started talking about yet on the municipal side, the community investment side. So certainly lots to come there. But the foundation at the moment is, let's figure out what a green deal looks like versus what the traditional bond deal look like. And let's make sure we get that right. Let's make sure we have the right audit procedures in place so that everybody is comfortable that the project that we said we would invest in, we're actually investing in. And investors are even saying, look, it'd be nice if you gave me extra interest rate, but I just want to make sure you get this deal right. So I don't think that'll last forever, but that's where it is right now.
And David, sorry if you're talking. I muted you because we were getting some feedback. I see Enrique's hand up, and if other folks want to raise their hand to elevate their questions, feel free.
I'm going to do that too, David.
Hi, Damon. This is Enrique with Climate Resolve. I'm calling from the other LA in this country, LA, California. And I really appreciate your presentation. Lots of really good information. I particularly liked how your public sector framework for reinvesting in the community is connected to the city's climate plan. This is work that Climate Resolve has also been doing here in Southern California. And we are about to launch the establishment of an enhanced infrastructure financing district, which is a regional tool, a financing tool that allows for local governments to 100% fund climate adaptability and climate resilience. And I was wondering, you know, since adaptation usually means that the neighborhood look and the look of buildings will change. And you mentioned that there are legacy investors who are not as open to that kind of change. We are finding that insurance companies in California are one of the biggest hinderers to climate adaptation when it comes to changing the functionality of our streets, for example, changing the functionality of our buildings. I'm wondering if you encountered similar blind spots in your goals or processes that you described. Thank you.
Thank you, Enrique. I appreciate that background. And, you know, for us, the historic nature of the buildings in New Orleans is one thing. And I would say we're all gatekeepers on that, even the agency itself. We want to see some kind of preservation happen. We understand things need to evolve and grow, but architecture in New Orleans is something that we were known for. We've always been known for, so we shouldn't lose that. That's one thing, but we know we need to also change and adapt with the times. So as it relates to the infrastructure, the insurance companies, we've been getting a mixed response from the insurance companies. So the insurance situation here in Louisiana may be a little different than what you're facing in other parts of the country, but it's a crisis right now because many of the deals that we've put to market or we've been working to get into the market have been frozen because of the lack of insurance coverage or insurance providers backing out of the market, charging higher premiums, which is creating bigger gaps in the projects and making them unaffordable. And we've asked about the reduction or the discount that we should see in these projects because they are following minimum green standards. They are going to have stormwater management requirements per the city's new laws. So they do check the boxes. So why aren't we getting a likewise reduction in our insurance coverage or in our insurance costs? And they haven't given us a definitive answer on that just yet. So I think the number one issue is that there's just a lot of carriers backing out of the market. And then on top of that, they haven't given us definitive guidelines on what resilience looks like and how it benefits your insurance premium.
Yeah.
Great, thanks, Damon. I think the feedback was coming from somewhere else, Brianna, but if it does it again, just shut me off.
I think we have,
There are a couple of it,
Shanna
yes.
and yeah, we have two related questions in the chat here. Probably should bring up. One is Shanna about pushback from builders and other entities around tighter standards, and then Alex has one about converting existing buildings from fossil fuels into renewables. So either of you like to intervene on those first before we hand the floor over? Sean or Alice?
Do you want
Alice.
to go first? This is Alice. I defer to Shauna. Her question was first. I don't know if you're
Go
able
ahead,
to...
Alice. I think she's muted right now.
Okay, no problem. Thank you so much. Great presentation, Damon. Thank you for sharing. I joined a little late, so sorry if I've missed this and you actually started in on presenting the scope of your work. But I am interested in looking at what we're doing in terms of adaptation and resilience as it pertains to our existing built environment and infrastructure, buildings and infrastructure. And so would your projects, scope of work include decarbonization or electrification?
Yes, it does. particularly on the infrastructure side. At the moment, we have a pipeline of public sector buildings lined up to be decarbonized. And we're looking to create a potentially a microgrid out of those public sector buildings. We've also been approached by private sector developers or a consortium of private sector developers and community organizations who want to build microgrids. For example, a developer along with a consortium of faith-based institutions are working on a project called Lighthouse New Orleans. And they're using each one of those faith-based institutions as resilience hubs for not only clean energy, but in times of disaster. So that's an example of two of the projects that we're focused on now. As it relates to multifamily, sometimes developers will finance energy efficiency. And well, let me back up. All of our developers have a minimum level of energy efficiency that has to be built into the projects. And that's based on the green, our enterprise's green communities standards. So all of our projects meet those baseline standards. However, not all of those projects are adding solar and battery storage.
And not all of them may be all electric. I mean, that's the key, right?
Sure. So to answer your question about what are we doing on the multifamily side, so the first step is when developers come to us for their original financing, there are additional incentives that we're trying to get them to bite on to take it a step further than those baseline requirements of enterprise green communities. That's one thing. And then secondarily, after those projects have already been financed, then we're going to them with a retrofit package so that they can cover energy, wind, and water retrofits after they've already done the primary financing on the project. So there's two ways that we're addressing it on the multifamily side. But on the public sector building side or institutional and private sector building side, there's a pipeline of projects right now that we're trying to bring to market where they would be retrofitted with solar and battery storage.
That's great. 2 follow-up questions. Would the public sector work include public schools at all, or are they primarily municipal or local government?
The public school system is a part of that process too.
Nice. And then on the community side for the independent developer microgrids, would those end up being still though private developer owned microgrids? So essentially community members would be end up paying essentially that private developer for their energy, or would it be community owned solar?
So what they've done so far is they've laid out a couple of overarching strategies that they want to accomplish as a developer. And they've also been dependent upon these new IRA provisions to come to market. So now that that has happened, I think there's going to be a little bit more definition to their plan. So I'm interested to see it. But in the meantime, they've just been financing projects on an individual basis. So they have a solar installer, the solar developer, and the community organization. They're going to each member of that community group and offering them their individual solar package. So they haven't done it as a collective financing just yet, which is what they want to do through us, but they're also trying to keep the project going. So I think they're going to have, to answer your question, Alice, I think they're going to come back to us with a renewed strategy because of the new IRA provisions. And that's what they told us late last year.
It would be great to see more community ownership in the same vein that you talked about, right? Building wealth and local, community wealth and local resilience. I'd love to see that, but thank you again for your presentation and for your answers.
You're welcome. I appreciate that. And I'm making note of the community ownership model.
Yeah, and then you're also the concern, unless Shana was able to unmute herself now, but any pushback on those fronts as she's brought up, as well as a related point from Ann Usher earlier in the chat about expertise that, for example, let's say if you receive pushback, then how would you go about the technical advocacy side of things that to basically demonstrate that, no, this is actually a viable approach. This is how it's going to benefit in face of such pushback. So just covering those 2 points raised in the chat.
So I'll start on the housing side. on the housing side, developers are, it's encouraging because developers have accepted the need for new building techniques and building models. So we don't have much issue on the affordable housing side. Additionally, the state housing agency, the Louisiana Housing Corporation, through their qualified action plan, which guides affordable housing development in Louisiana, that QAP calls for a minimum level of green standards that all developers have to follow if they want tax credits and if they want other benefits. So they've adjusted. They've adjusted because it's just built into the program. And so we don't hear many issues coming from the developers. The challenge with the developers is actually getting them to take it a step further. And it's not that they don't want to, but the cost of it. They're still trying to justify, okay, why should I add solar and battery storage? Why should I completely electrify the building? You know, why should I do these things? I'm not going to get the return on it. Or is there enough public capital out there to subsidize it or offset it? So there's a willingness to do it. We just have to make the financing work for it. On the infrastructure side, I would say that less pushback than there was a few years ago, but I think most of the pushback was coming from a political perspective. So we talked to a few commercial banks at one point about creating energy efficiency financing models and programs for commercial building owners. And, you know, one banker just told us straight up, hey, I want to do this. I think this makes sense, but I can't take this to my clientele. I can't tell them anything about solar or energy efficiency. They'll run me out of their office. So what am I supposed to do? Now, I think that changed. That was before COVID when I had that conversation. So I think there's more willingness to do it now. But we also had pushback from the commercial banks when we tried to bring CPACE to Louisiana. And I think their tune has shifted on that a little bit as well. So more to come on that front. But I think the pushback is coming from also the utility side of the equation is important. We've been getting more progress from our local utility. There's still a lot of work to be done, but everybody wants to see how it's going to play out. Everybody wants to see how their bottom line is going to be affected. So people tend to move a little bit slower than we would like at this point in time. But all that to say, there's so much work out there, and there's enough people in the ecosystem that are willing and have a desire to do the work that we can get started. So we don't have to wait around too much, but there are still people that have to be won over in order for this to fully blossom.
David, go ahead. David Johnston, you had something.
Yeah, Damon, thanks. As we talked about just before the call started, I spent a lot of time in New Orleans post-Katrina working with Habitat for Humanity and the local government. And it's incredible what you have accomplished since that time. I'm involved with a lot of finance and banking areas, but what's really impressive to me about what you're doing is how you've integrated lots of different things into a comprehensive plan. There are lots of pieces floating around. There are lots of organizations throughout the country talking about this kind of thing, but not integrating it the way that you have. So congratulations and thank you.
Thank you, David.
A comment, a question on green banks. Lots of green banks out there, a bit of confusion about what a green bank is. Often the sense is it's a bricks and mortar bank and not really what a green bank is. I live in South Carolina, and we are in the process of starting up South Carolina's first green bank. And in the course of that, I've talked with green banks throughout the country, and we joined the Green Bank Coalition as well, which has been very helpful. Just a question, what has your experience been, and what advice would you give to someone starting up a green bank like South Carolina?
Yeah, David, I actually had a chance to meet the South Carolina representative at our last Green Bank Consortium meeting.
Good, so you met Jordy.
Yeah, I met Jordy. That's right.
Yeah, Jory and I are now sort of co-doing this. He's the brains behind it, and I'm sort of the old man, but he's terrific.
I got it. Well, it's nice to meet the other half of it. And, you know, I told this to Jory when we had a conversation. I think the best thing to do right now is start with that community focus.
Yeah.
That has to be the first and most consistent thing that you do in the startup process. And I think that's what helped us push this along faster, because we just try to take what the community said they wanted and needed, add a little flavor to it based on expertise. So I think that's the simple part of it. But as it relates to determining what the model of the agency is going to look like, what the focus is going to be, that really needs to be based on what South Carolina needs.
Yeah, we're fortunate. A recent development, I think, since you talked to Jory, is there's a bank in Columbia, South Carolina called Opus Bank. Mm-hmm. Opus Bank is a minority-owned bank that's been in South Carolina for over 100 years. And we are engaged in discussions with Opus about a partnership in getting our green bank started, and then support from the bank and vice versa, support from the green bank to Opus. So.
Yeah, you know what? In that meeting, and George can tell you, all the green banks agreed that nobody knows what a green bank is, and we probably should not be called green banks. But here we are, and I think that that definition is going to evolve with EPA coming out with all of this guidance, and everybody trying to figure out how to get access to it. So my guess is that the term green bank is going to include credit unions, CDFIs, commercial banks, community organizations. It's just going to be a wide range. The name may even change over time.
I know. And well, great work again. Thank you.
Thank you, David. You're welcome.
And to follow on from that, Ingrid just had another point in the chat, again, on this theme of getting buy-in, that she's asking nature-based solutions. What's your level of understanding, as well as just what have been the effects of COVID, namely on supply chains, as well as any changes to how funding is done?
Yeah, I'll take the back into that question first. In terms of the supply chain and COVID, it certainly impacted the financing for underlying projects that we're bringing to market. Many of the developers have talked about three key factors: increasing construction costs, increasing interest costs, and of course, increasing insurance costs. So those three variables tend to stand out most. And of course, we're trying to get them to take the extra step of putting more resilience into those projects and properties. So that's a cost that they're also considering. On the bright side, we're hearing that construction costs are starting to stabilize just a little bit. And that's making projects more feasible. So developers seem to be a little bit more upbeat about bringing deals to market than they were just a couple of years ago. And interest costs, of course, those are creeping up and will stabilize at some point. No one can ever really predict where they are. And in the insurance situation, it's still a wild card based on the conversation we had earlier. So those are three factors we're keeping a close eye on as it relates to post-COVID disruptions. And can you repeat the first part of that question again?
Well, yeah, the more or less resistance around nature-based solutions. That is it easier or harder to buy in?
Well, there's openness to nature-based solutions here, and I know there are a few opportunities on the table that the city has been looking at. We have not been formally presented with a nature-based solution just yet, but I know that there are a few agencies that are working on bringing some of those projects to life. I would say that the key challenge on the nature-based solution side is figuring out the model. How do you pay for it? Because by definition, for example, if we wanted to do a tree planting initiative across the city, okay, where's that capital going to come from? What's going to be the repayment source? How do we scale that up? Is that something that needs to be a part of our bond program, our general obligation bond program on an ongoing basis? I don't think there are answers to those questions yet on the nature-based solution side. But I do expect us to be brought into the conversation at some point. We just haven't been at this moment.
Anything to add, Ingrid, if you like to speak up? Sure.
Yeah, I had heard about a project out of British Columbia where they were saving hundreds of thousands of dollars just working on their shoreline and using the shoreline to deal with water storage. And so that was, they could measure how much they were saving through that project.
Okay. Do you know the name of the project?
I will get you that link.
Okay, thank you.
Yeah. And a quick follow-up to that would be, is it anyways feasible to structure some form of revenue bonds around that? So if you're able to attribute those savings from damages to this nature-based solution, this intervention, then could a revenue bond potentially be viable?
You know, I think it boils down to two scenarios. We talked about this earlier with the impact bond style financing, where, you know, there's a pay for success model, where if the project goes well and you're saving money or you're reaping a benefit somewhere else, you can apply that to the cost of the project. So I think that's going to be relevant in some cases. Best case scenario would be cities and states to put this as a part of their capital budget and allocate a space for nature-based solutions in geo bond projects. So, you know, taxpayer dollars are funding the geo bond so that those underlying projects or the bonds that go to those underlying projects is not dependent upon a payback. So I think that would also be an ideal scenario where you can just get more allocation from city governments for this type of financing. And that's one of the issues right now. If you think about using the municipal bond market as a proxy for where we are as it relates to green municipal investment, only 5% of new money that comes to the market is green right now. Only 5% in the muni bond market. We need to get to 100% sustainable muni bond market. So what will it take to get to that 100%? It's going to take a lot of rethinking of processes, capital budget strategies, of course, new agency strategies, green finance frameworks that we talked about earlier, that every public agency actor is going to need to have if it wants to make this transition. So I think there's a lot of work to bridge that gap. And that's where the devil is in the details, is making sure that an agency can make that leap so that it can begin to actually sustainably finance these types of projects. So in the beginning, you may have to try a pay for success model just to prove it out to a city. But once a city or a state recognizes the importance of it, perhaps it can allocate more funding to it, raise the profile of it at the federal level as well, and find new funding models for non-payback funding models to get those nature-based solutions done.
Well, that sounds very much like a good close to this session. It's definitely something for the Funiding and Finance Group to focus on, to Krong. And Joyce, go ahead. We're getting close to wrap up.
Well, yes. So thanks so much, Damon. It's incredible. I want you to know that this is more conversation than we've had with any of our other speakers. So you've really hit a nerve here. And I'm sure that the recording will be watched by many as well, including those of us who were here who couldn't possibly catch all the greatness that you were just sharing. So really appreciate you, and super looking forward to our next session, everyone, next month. And I wanted to also make note that the leadership group for Funiding and Finance peer group is looking for new leadership. So if you are interested in helping to set the agenda and figuring out how these sessions should go, some of you did produce some information in a survey for us. Others of you should feel free to reach out directly to me or to David Dodd or to Yangbo. And there's some others on the team here too who are also in the leadership group, because we are expecting that there will be a transition in the leadership group. We can't have the same group at all times. It just doesn't contribute to a lot of new ideas. So please do reach out if you're interested interested in attending a monthly leadership group meeting to set the tone and tempo for the 2023 Funding and Finance Group.